Gold hit new all-time highs in euros and in pounds, but not in dollars. And so it's still going to be a great year for gold, even if it's not the best since 1979. But, gold has had a great century, millennia. I mean, nobody really talks about it. But since the beginning of this century, January 1st, 2001, gold has beaten the S&P. It's beaten the Dow. It's even beaten the NASDAQ. In fact, if you go to the bottom of gold in 1999, that was the bottom of the bear market that went from 1980 to 1999, about a 20-year bear market in gold. Since that low in 1999, it's outperformed the U.S. stock market. So you wouldn't know that from the way the pundits talk about gold in the market. And I expect that trend to not only continue, but to accelerate.
According to contrarian analysis, gold will likely outperform stocks over the next few months. That's because today's average gold market timer is far less optimistic than the average stock market timer, who is currently more exuberant than at almost any other point over the last 25 years. That means there is more of a wall of worry for gold to climb than stocks. Economist and gold advocate Peter Schiff touts gold's impressive performance, noting that it is having its best year since 1979 before a dollar-driven setback. He emphasizes gold's long-term strength, outperforming major U.S. stock indices since 2001 and marking a significant rise since its 1999 low. The performance of gold as an investment over the long term really depends on the time period being analyzed. For example, over certain 30-year periods, stocks have outperformed gold and bonds, but over some 15-year periods, gold has outperformed stocks and bonds. So, stocks outperform gold over the longer term by about 3-1, but gold may win out over shorter time horizons. According to Peter Schiff, U.S. stocks are overvalued and vulnerable to an economic downturn. He predicts they will lose value relative to gold, even if they seem to rise in a weakening dollar. From a technical standpoint, Peter argues that fiat currencies are being debased, positioning gold as a vital store of value. Unlike currencies, gold is durable, doesn't decay, and is easy to store due to its high density. In fact, since the creation of the Federal Reserve in 1912, the U.S. dollar has lost nearly 98% of its purchasing power. The gold price, on the other hand, has multiplied 100-fold. This may seem like a lot, but gold has just maintained its purchasing power. Now, we present the clips of Peter Schiff's insights from his recent interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates.
It was on track for its best year since 1979 until the election. And it's had a setback, with Trump, because we've had a big rise in the dollar. And so gold hit new all-time highs in euros and in pounds, but not in dollars. And so it's still going to be a great year for gold, even if it's not the best since 1979. But, gold has had a great century, millennia. I mean, nobody really talks about it. But since the beginning of this century, January 1st, 2001, gold has beaten the S&P. It's beaten the Dow. It's even beaten the NASDAQ. In fact, if you go to the bottom of gold in 1999, that was the bottom of the bear market that went from 1980 to 1999, about a 20-year bear market in gold. Since that low in 1999, it's outperformed the U.S. stock market. So you wouldn't know that from the way the pundits talk about gold in the market. And I expect that trend to not only continue, but to accelerate. I still think that U.S. stocks are very expensive historically relative to their earnings. And I think the earnings are going to come under a lot of pressure in the adverse economic environment that I think is coming. And so I think you're going to continue to see U.S. stocks lose value priced in gold, though they may continue to gain value priced in dollars. I mean, because the dollar can lose a lot more value than stocks. At least companies are real businesses. The dollar is just a piece of paper. We created out of thin air. And so I think people should own gold as an alternative to the dollar or the euro or the yen or any of these fiat currencies that I think are, being debased. It's not an investment per se. It's not a productive asset. It's a commodity. And so you can hold it as a store of value. Gold is unique among commodities in that it doesn't tarnish or decay. So you don't have to worry about it losing its value. And gold is very expensive, so you can store a lot of gold in a shoebox, right? So for most people, all the gold that they can afford is easily stored, by themselves. You just have to keep it safe, make sure nobody steals it from you.
Regarding the U.S. debt bubble, Peter Schiff expresses surprise at its size and resilience. He warned that rising payments, potentially reaching $2 trillion or more annually, are unsustainable. Peter criticizes the $30 trillion debt expansion, highlighting the dollar's declining purchasing power despite its relative strength. The dollar is dominant in global financial markets, as evidenced by its use in nearly 90% of global foreign exchange transactions, nearly 60% of global foreign exchange reserves, and invoicing for over half of global trade. However, the growing U.S. national debt may diminish the dollar's global preeminence and U.S. leadership on the international stage. America's high and rising debt matters because it threatens our economic future. The COVID-19 pandemic rapidly accelerated our fiscal challenges, but we were already on an unsustainable path, with structural drivers that existed long before the pandemic. Concurrently, Peter argues that neither political leader has the will for real reform, accusing them of sustaining the bubble instead of addressing systemic issues. He predicts worsening economic strain and questions whether the bubble will grow further or collapse. Let's get back to the interview.
What surprised me, Anthony, is that the bubble has gone so big without any adverse consequences. In fact, one of the questions that Powell got, was, does the amount of debt impact your decisions on raising rates, which of course it does, but he lied and said, oh, no, we're nowhere near there. I mean, we don't even consider how much debt the U.S. government has. We raise rates to whatever level we think is appropriate. We're not in a position yet where the government has so much debt that interest rates are a significant factor. Well, it's a very significant factor. We're already spending, $1.2 trillion a year on interest payments on the debt. A year from now, it'll probably be $2 trillion a year. And, if the Fed had to raise interest rates much higher, it could be $3 or $4 trillion. I mean, those are sums that are impossible for the government to collect. And so obviously the Fed is cognizant of that. But I'm surprised that, from the launching of QE1, which, when they first launched it, they didn't call it QE1 because they all assumed it was going to be one and done. I was one of the few people that said, no, this is the beginning of a process that will never end. But we've now added $30 trillion of debt. And, everything seems to be okay. I mean, the dollar is relatively strong against other currencies. I mean, it's not absolutely strong in that, prices have gone up a lot. So the purchasing power of the dollar has gone down. But relative to the euro or the Japanese yen or other currencies, the dollar's doing pretty well. And interest rates are still relatively low. The government is paying 4.5% on a 30-year treasury. That seems ridiculously low, given the enormity of the debt and the probability that it's going to get inflated away. So, yeah, the bubble has gone on for a lot longer than I thought. But the process of sustaining that bubble has done a lot of damage to the underlying economy. That is why Donald Trump won in 2016. It's why he lost in 2020, and it's why he lost again in 2024. Because for the average American, life is getting worse, not better, as a result of all this debt and inflation. And the public doesn't buy all the rosy data coming out of Wall Street and the administration that the economy is great, it's growing, unemployment is low. People are struggling. They've been struggling for over 10 years, 12 years in this inflation economy. They're working harder and harder and having less to show for it. People now have 2 or 3 jobs when they used to have 1. They have no more savings. They have record amounts of debt. They're paying record high interest rates on that debt on their credit card. And so they're desperate for the situation to change. But unfortunately, none of the candidates, and I think Trump would be included, have the guts to actually do what's needed. I mean, even though Trump has now got himself surrounded by Elon Musk, who's like a newfound Ayn Rand, libertarian, free market guy, posting stuff from Milton Friedman. I don't see, and I don't know Trump as well as you do. I've never really worked with him. But I just base what he did in his first term, and I don't see a huge transformation. I think Trump said what he needed to say to get elected. I think he, said a lot of things that appeal to the libertarian community, to the crypto community. He said a lot of things that he probably doesn't mean because he wanted donations and he wanted votes. But I don't think that, we have a real mandate for legitimate reform like they have down in Argentina. I just think Trump's going to try to blow more air into the bubble. Whether he succeeds in making it bigger or it blows up, in his face, we'll see.
Gold prices have continued their upward trajectory in 2024, surpassing previous records and capturing the attention of traders worldwide. In 2024, the Federal Reserve, Bank of England, and European Central Bank adopted dovish stances, lowering interest rates. This reduces the opportunity cost of holding non-yielding assets like gold, potentially enhancing its appeal. With rising debt levels and the ongoing debasement of fiat currencies, could gold's historical strength position it as an essential asset for wealth preservation in the years ahead? Drop your thoughts in the comments section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the next video.